Low inflation needs to remain the North Star, and it will remain the North Star. Why? Inflation hurts everybody, and particularly the most vulnerable households. What is price stability? Why is it so important? Price stability is beyond just having stable prices. It is really about providing the foundation of predictability. That is absolutely the cornerstone of any well-functioning economy. Ultimately, the mandate of central banks is maintaining trust in money. The stability of prices, that's maintaining the purchasing power of money, that's what monetary policy does. But you also have financial stability. That is ensuring that savings that people have can be saved over time. And the third one, you also need to be sure that the money that you have in your pocket, you can use it whenever you want it. That's your payment system. That is why central banks are uniquely positioned in what they do to provide that trust in money. I'm Andrea Maechler, Deputy General Manager of the BIS.
And I'm Krista Hughes, speaking from Basel. You're listening to BISness, the podcast from the Bank for International Settlements. Andrea Maechler joined the BIS in September last year from the Swiss National Bank, where she was a policymaker on the governing board. She's the first woman in the role of Deputy General Manager and the first person from Switzerland, which hosts our headquarters. Welcome, Andrea.
Thank you, Krista.
So you've been at the BIS for just over a year now, and it's been quite a tumultuous time for central banking, and also for people who've experienced, such severe inflation, for many the first time in a generation. And central banks had to react quite strongly by tightening rates and keeping them high. Do you think that they could have acted any other way?
Well, I think credibility among central banks is very high. If you remember before the crisis, before the inflation episode, there were a lot of concerns about fiscal dominance. Would central banks ever have the courage to raise rates in the face of very high debt levels? Those concerns are gone. Once the central banks saw inflation coming, they reacted forcefully. And you know what? It works. Monetary policy works.
And even if headline inflation rates are lower than last year, for people in the street, they still feel that the cost of living is higher than it was. Do you think that the way central banks think about price stability will have to change in future?
Low inflation needs to remain the North Star, and it will remain the North Star. Why? Inflation hurts everybody, and particularly the most vulnerable households, the ones with tight budgets. What is price stability? Why is it so important? Price stability is beyond just having stable prices. It is really providing the foundation of predictability. That is absolutely the cornerstone of any well-functioning economy. Why? Employers need to understand how do they set prices or even wages. Consumers need to understand when do they pay for what, when do they want to purchase what, how much should they save for retirement, for traveling, for career decisions. And investors, how much should they invest? What is the likely return? All of this requires stability of prices. Ultimately, the mandate of central banks is maintaining trust in money. I've spoken about the stability of prices, that's maintaining the purchasing power of money. That's what monetary policy does. But you also have financial stability. That is ensuring that savings that people have can be saved over time. And the third one, you also need to be sure that the money that you have in your pocket, you can use it whenever you want it. That's your payment system. That is why central banks are uniquely positioned in what they do to provide that trust in money.
And you argued in a recent speech that the source of risks to price stability, so that the drivers of inflation, are changing. So what is driving that in the economy at a more fundamental level?
You're absolutely right. What is interesting is we have relived how there are different drivers of inflation. Over the last 30 years, the key driver of inflation was really what we call demand-driven. Was the economy creating either too much pressure or too little pressure that would be reflected in too high or too low inflation. Recently, after coming out of the pandemic, we suddenly had to experience different types of shock, supply shocks. We had the global supply chain disruptions. We had insufficient labor force because everybody was in lockdown. We had the issue of the energy prices when Russia invaded Ukraine. All of these were suddenly supply shocks. Traditionally, supply shocks you could kind of understand how they work through inflation. You have a relative price change, but then the economy adjusts, the prices adjust, no impact on broad-based inflation. But that changed. And now we have to understand, how do we go about if we were to have more supply shocks, more persistent supply shocks, and different types of supply shock, geopolitical shocks, climate shocks, protectionist shocks. All of these are likely to affect the economy very differently.
What does that mean for the way that central banks might react, might use their monetary policy?
So that's a very good question, a very important question. Historically, and the BIS has done really interesting research on that, central banks tended to what we call look-through supply shocks. Because supply shocks, by their nature, are supposed to be temporary, transitory. They have an impact, and the impact flows out, or the economy adjusts, and inflation in itself is not affected. Now, if you're going to have more shocks, more persistent shocks, more regular shocks, it will be very much more difficult for central banks to automatically look through them. They will have to be ready to react much more forcefully, much faster, in order to make sure the economy does not move from what we call a low inflation regime to a regime where inflation becomes high.
And you mentioned some of the analytical work that the BIS has done working on these and other issues. What impressions do you have of the BIS now from the inside compared to the view you had previously as a central banker and a regular visitor here for the meetings?
Well, to be fair, I was quite familiar with the BIS because for the SNB, when I was on the governing board, the BIS was always a very important platform for exchange. It was an environment we came to get inspired, to be challenged, to go back. We knew we would come back with lots of new ideas to think about and to share internally. And that is what I have found inside. So the powerhouse of research that we have, the critical thinking that we have among economists and the rest of the institution is really there, is vibrant, and in my view, a very important part of the BIS. We're also the bank of central banks. That's something in my previous job. I was also very close to financial market, to managing a balance sheet. And that is a very important part of the BIS. It requires extremely good skills, high professionalism, being on the market almost 24 hours around the clock, and of course, good technology. And last but not least, there's the Innovation Hub. It's the impact. It's how can the BIS help the community of central banks understand what innovation, technological innovation means for their mandate? How can we bring public goods to them that they can use so we can make better use, better synergy across budgets, across skills to really move forward in a safe way with innovation?
One of the things you've worked on during your career has been innovation, and you're currently very involved in some of the work we're doing here at the BIS on artificial intelligence. What is it that interests you about that?
Well, AI, on one hand, it's very exciting, right? Because you see what AI could bring, and it's really fundamental to many areas in the mandate of central bank. AI can help us in the risk analysis, risk identification, and risk analysis. It can help us in the compliance area, which is particularly key in the payment system domain. It can help us in creating real-time indicators, nowcasting, also for inflation. I'm hoping it can help us better understand new dynamics in the prices and the price formation. All of these are really important for central banks because in the end, we're one of the largest consumer of data and producer of data. So AI is really exciting. Clearly, we should not just develop and adopt AI. We need to adopt safe AI. That's very important from our mantra of central bank, which is, again, trust in money. We need what we need. We need to have credibility in what we do. And that's where the centrality of data comes into place. It's all about data, but not any data, right? The data needs to be secure. We need to respect privacy laws. We need to make sure confidential information remains confidential, and yet we want to use the data as much as we can to make sure we can run the proper models. So this is a work, in my view, where we can really help, is putting a lot of effort on creating a framework for data governance so that we can use AI in a safe way. For us, internally, we're doing some very cool project, but also collaborating with the community of central banks to create great synergies more broadly.
And you mentioned the community of central banks, and you recently organized our Green Swan conference that was brought to talk about the impact of climate change on the real economy and on monetary policy. What were your takeaways from that?
So that was a really interesting conference, I found, because for the first time, we brought together not just the usual culprits, the policymaker, the academics, but also a CEO from the real sector, in particular from high emission sectors. And that was really interesting to hear from them. How do they see the challenges of transitioning into a cleaner economy? What does it mean from a financing perspective? What does it mean from a technological? What are the technology that they're looking into? How do they see that transition, which is really a very complex transition? For us, it's very important because we need to understand the transmission impact, ultimately on growth and on inflation. And this exchange, in my view, was extremely insightful. It helps us do the right kind of research, which we do internally. We do quite a bit of research in that area. We collaborate with the NGFS, the Network for Greening the Financial Sector. We, in fact, co-chairing the research group. And we have a number of very interesting projects in our innovation hubs that help in that view. For instance, Project Gaia helps to create new indicators that help better analyze climate-related risk. So that exchange, once again, is so fruitful and so important for us to really understand how we can best contribute to the community of central banks.
And what other important challenges do you see for the future?
Well, an important one, in my view, is the changing landscape, right? So monetary policy remains pertinent, many challenges on that front. But the broader landscape may be changing. We've been talking increasingly about the risk of protectionism. And more generally, international collaboration, the way we have known it, may change. And so far, the world in the last 50 years has tremendously benefited from a world that's multilateral, clear rules, with open capital accounts, flexible exchange rate, or more or less flexible exchange rate. That world has been very good for diversification. It has helped create great sources of investment across the world. It has helped each country, each actor make best use of its comparative advantage. And it's important to maintain that world. Now, what does it mean for central banks? On one hand, each central bank is mandated to maintain stability, monetary and financial stability in its own jurisdiction. But financial monetary stability cannot just be done in isolation. It needs to be done internationally. And so what I'm really hoping and what I have full trust in is that central banks will maintain and foster that very strong network that they have. Ultimately, we are a technocratic institution, and to really focus on what is it we need to do to make sure we can maintain monetary and financial stability. And the BIS is going to be here, and that's really where this is our raison d'être, and this is where we want to put all of our intention.
Great, thank you, Andrea, and thanks everyone for listening. You can find out more about the work of the BIS on our website, bis.org. Do subscribe to BISness on iTunes and Spotify, and follow the BIS on X, LinkedIn, YouTube, and Instagram.